From 2013 to October 2023, our Alpha Hedge portfolio achieved 1,047% gross performance, outperforming the S&P 500's gain of 201%. In October, we recorded a 1.9% performance. Our Alpha Hedge strategy algorithm observed three information and defined the portfolio optimization accordingly. Alpha 1, market cycle phase. With this analysis, we define in what time of the cycle the asset is now. We analyze the present situation of the asset. This graph shows the market cycle phases for each benchmark asset. Following our post-analysis, assets in a negative cycle are excluded, leaving only those assets that are in a positive cycle as of the end of October 2023. Alpha 2, highest historical positive volatility, or highest probability of long-term uptrends. With this information, we analyze the past of the asset. The selected ETFs have exhibited positive volatility in the past, and Alpha 3, highest expectancy ratio. With this data, we analyze what to expect in the future based on statistics, not astrology or opinions. Finally, we calculated the expectancy ratio. With this data, we are informed about which markets will be included in our portfolio and the optimal position sizing for each. We categorize the assets into two classes: alpha assets, which are leveraged ETFs designed to amplify results during bull markets, and hedge assets, which serve to protect our capital during bear markets. Starting with an investment of $500,000 in January 2013, by October 2023, the portfolio's value would have grown to $3.2 million. This figure is after reinvesting profits and dividends with no contributions and is net of our subscription fees. In comparison, an investment following the S&P 500 index would have led to a portfolio value of $1.5 million. Remember, our principle of radical transparency ensures that our clients have full access to our Alpha Hedge portfolio in real time through a real-life brokerage account, affirming confidence in the presented results. The optimized position size was created by the computer scientist John Kelly in a 1956 paper referenced in William Poundstone's book Fortune's Formula, and later popularized by Edward Thorpe when he applied the theory to beat the game of blackjack. It was also applied by Jim Simmons, founder of the hedge funds Medallion and Renaissance. The formula is based on the principle of maximizing the expected logarithm of wealth, which is equivalent to maximizing the expected geometric growth rate. The formula provides a strategy for bet sizing that leads to the highest possible growth rate in the long run. Our clients receive personalized advice on managing their Alpha Hedge portfolio positions, with clear instructions on when to buy, sell, increase, or reduce their holdings. Investors are advised to repeat this optimization and portfolio rebalancing process on the first Monday of each month. We didn't reinvent the wheel, just portfolio management. Traditional portfolio construction, as you know, is outdated. Portfolio optimization tailored for you just arrived. Subscribe to a plan and get access to our optimization strategy applied to your portfolio. Receive individual optimized portfolios, case studies, and analysis in few business days, and experience tailored individual and group guidance live sessions. ZURIQUE Capital's subscription replaces unreliable investment services for one flat monthly fee. You're not just paying for advice. You're investing in personalized and independent guidance tailored to your unique financial situation and goals. Hate long droning meetings? We trim the fluff. Each session is concise, valuable, and actionable, and there's no conflicts of interest to ensure that the advice received is truly in your best financial interest. Access our website by clicking the link in this video and see if ZURIQUE Capital's portfolio management solution is right for you. I know it totally is. If you have any doubt, book a call with me and get a guided tour through our subscription and find out how you can change the way you invest forever. I'm Dan Castro, founder of ZURIQUE Capital and author of the Wall Street Insider Report. If you like this analysis, please let me know by liking, commenting, saving, or sharing with your friends. Thank you for watching.